We're going to move on to our next speaker right now. I do believe that he's here. Tarik Chebib. Why does everyone make the same trading mistakes? That's what Tarik is going to be talking about today. From Capital, and 10 years of trading experience that Tarik's got, 6 years in Dubai, speaking to novice and experienced traders for a number of different brokers. And what Tarik's going to be talking about today, overtrading, fear and greed, ego, leverage, protecting your downside, risk to reward ratio, and getting attached to one trade. So please join me in welcoming to the stage Mr. Tarik Chebib.
Hello everyone, how are you? Good? Do we have any traders in the house? Anyone that trades? You trade? Who else trades? Everyone is trading. Okay, so I'm going to give you a little bit of an overview of what I'm going to be talking to you about today, but it's all focused on you. There's no point in having another kind of conversation or presentation that is about our company. We are a broker just like many other brokers out here, but I want to make the session about you, and I want you to get something out of it. Hello? Yeah, this is better. So I want you to get something out of this conversation, and so don't be shy, ask me questions. I'm trying to help you. 1 minute on the company. We are a fintech that has been started 5 years ago. We are regulated in the UK, in Australia, in Europe, and in many other kind of jurisdictions. And we are about to open here in the Middle East as well. So to get into it, why did I choose this kind of topic to talk to you about today? I've been in the Middle East for 6 years now, and I've been giving a lot of seminars and been speaking to a lot of different people that trade the financial markets, and I trade the markets myself. So I've got skin in the game, and I think I've got a pretty good understanding what people at all levels, from beginners to very wealthy individuals, face every single day when they're trying to trade the markets. And that's what I want to talk to you about, and hopefully you're able to take something away from this and remember it. So I have 5, 6 different things that I want to talk about, but I want to gear it to what is most useful for you. Anyone interested in saying when you're trading, what is something that you're struggling with? Has anyone got any kind of problems trading the financial markets, or are we all millionaires in this room? No? Signals. Okay, so that's an interesting point. The gentleman over here has a problem with signals. And a lot of people, when they start trading, and this is true for me as well when I started trading, the hard part is to decide when to get in and when to come out of a market. And some people go and pay for a provider to get him to get you signals and basically take that decision making away from you so that he can help you get started when to get into a position and when to get out of a position. Yeah? With my experience, I tell you that this isn't actually what is the hardest thing about trading. Yeah? Pressing a button and saying buy or sell is not the hard part. The hard part is when you're actually in a position, right? Because then it becomes interesting, what do you do? You know, do you exit a position? Do you keep it open? And you keep having to make that decision in the back of your mind, you know? Let's say you enter a position and you're up $100. What do you do with that position? Looks good, right? You're up $100. It's finally going in your direction. Now let me give you a couple of scenarios. If you just had 3 trades that went against you, what are you going to do with that position? You're going to close it pretty quickly because you want to make up for the losses that you had before. Yeah? Whereas in this position, you would have had potential to make a lot more money. Yeah? So a lot of the times what I see with retail traders that are just starting out is that the risk to reward ratio is something that they struggle with. Yeah? They let the losses run, and it takes small-ish kind of profits. Yeah? The problem with that is that all of a sudden you need to be successful or have successful trades a lot more of the time. Yeah? Instead of having a risk to reward ratio of, let's say, 1 to 3, where you only need to be right 25% of the time to break even, if you flip it around and you take small profits and have the losses run, all of a sudden you need to be right 75% of the time just to break even. Yeah? So this is something to keep in mind. I didn't answer your question. You said you had problems with signals. Yeah? But I'm actually telling you, it's not the issue with the signals or when to get in and when to get out. The issue is managing your position. Yeah? Once you're live in a position, what do you do with that position? And that's a much more interesting kind of thing to think about. Take the pressure away from when do you get in and when do you get out, but analyze what you do when you're actually in a position. Yeah? Because when you're in, you can make a lot more mistakes. If you plan your trades in advance, yeah, and you do your analysis and you don't interfere. There's this saying in trading that that's called, you know, sit on your hands and you make more money than when you don't sit on your hands. What does that mean? Sitting on your hands, you can't interfere with your open position. Yeah? The problems come when you actually interfere with your positions. Yeah? When you have done your analysis, but you get excited for one reason or another. You hear a friend say something about your market, or a news outlet, Bloomberg, someone posts something about the market that you're trading, and you're thinking, oh, maybe my analysis wasn't right. Maybe I should come out now. Even if you're in a profitable or in a negative position, and it creates fear. And fear then dictates your decision making, right? And when you have, this is another topic that I want to talk about, because I think everyone who has actually traded the markets before has felt this at one point or another. Fear and greed are the two emotions that come in the way of a lot of people that want to be successful in the markets. Yeah? And that also differentiates someone that is a professional client that has been in the markets for a long time and someone that is a newbie. If you don't know how to control your emotions in trading, it can get very, very difficult. Okay? So what I'm saying with that, the same as the example of sitting on your hands, is that if you actually understand that when I make decisions based on fear or based on greed, that can affect my trading massively, and you're aware of it, then the next time this happens, you need to have a mechanism to not let it affect your trading. Yeah? What I mean by that, I'll give you an example again. Let's say, what market are you interested in? Indices? Okay. Some of the more traditional markets, the indices are basically an instrument that, you know, let's say the DAX 30 is the 30 biggest companies in Germany, all their share prices put together. So if you think that the German economy is going to do well, the index of the German economy, the DAX 30, is going to do well. Let's take that example. Let's say you bought the DAX, yeah, and you think that the price will go up. In that instance, you're looking out for news to see whether something is actually going up or not. You read something on Bloomberg and you say, let's take one of the companies, Lufthansa, which is the German airline, has a problem, or Siemens, or any of the other companies in there, has a problem, and you think that it will affect the position negatively and that it will drag down the market. In that instance, it may actually happen that there's a flash crash or something that affects the price and it drags down your position a little bit. Yeah? And you see some profit on your position, and you actually want to bank profit on that position. So the thing that you don't want absolutely to happen is to go out with a negative trade. Yeah? In that scenario, you need to have done your analysis beforehand, yeah? And make the decision, do I stay in this trade or do I come out of this trade? Yeah? And that's a tough situation to be in. Yeah? It could have been you entered, you're now slightly up of the position, you see it going down. What do? Do you keep that trade open or do you let it run? Yeah? And this is exactly what I told you before. Now you start interfering. Now, you know, there's a lot of people that like to be on their phone 24/7 and watch the markets. It affects your decision making because all the time when you're looking at that position, you have to make the decision, Do I stay in or do I come out? Yeah? And that actually then leads to decision fatigue. So you could have planned your trade and you could have said, I'm definitely going to take that trade and it's the right trade, and you would have been profitable, but because you keep looking at your phone and you keep making that decision, do I stay in or not, all of a sudden you take the wrong decision. And it could have been the wrong decision with a profitable trade, but a small profitable trade. Or let's say you have your stop loss. How many of you in the room use stop loss? 1, 2, 3, 4. On every position? There's a quite divide. On this side, we've got the stop loss. On this side, we don't have. You use the stop loss. Okay, good. Do you take it on every position? No? Yes? Oh, the only one. Who takes the stop loss on every position? 1, 2, 3. Be honest with yourself. I don't care. I mean, it's. But I can tell you from my experience, the people that come to me, I can tell you why you're not using a stop loss. Yeah? You probably had an experience, you have placed some trades, and the stop loss was triggered, yeah, and then the market reverses, goes back up. So you learn from that experience, and you said, why should I use a stop loss? The stop loss always stops me out, and I'm losing money. Yeah? That's exactly what happened. Now let me ask you another question. Are you a profitable trader? Exactly. Every single person that I've ever talked to that tells me, no, I don't use stop losses. When I ask them the second question and ask, do you use stop losses? And the answer is no, they're usually also not profitable. Why is that? Yeah? Your trading style is a very common trading style, and there's nothing wrong with it. I'm not saying that you can't be profitable with it. But the problem is volatility in the markets. Yeah? Most answer is usually, oh, I watch the markets. Don't worry, I watch the markets. I trade out of the position if it goes against me. Yeah? Now let's take the examples that I was giving to you before, and you have been in this position for 3-4 hours. Yeah? After 3-4 hours, you become tired because you keep looking at the screen. Yeah? And you say, okay, it's nighttime. I'm going to go to sleep. The market has been quiet all day. I'm going to deal with it in the morning. Yeah? You wake up in the morning, and one position has destroyed your account. Or let's not go to that extreme. Let's say it has destroyed your whole month of trading profit. Yeah? You take small profits every single time, and then one position has an outsized loss and deletes all the profit or deletes your whole account. I've seen people blow a whole account on one single trade. Yeah? This is an issue for a lot of people that are starting out with trading. A trade becomes like your baby. Yeah, and that's the wrong way to think about a trade. Everyone thinks, one trade is going to make me rich. Everyone trades the markets to make money, right? But this attachment to one particular trade is a problem. Because let's say you've had a good run, you had 6-7 successful trades. On the 8th trade, you're definitely going to think, look, I just made money 7 times. This trade's not going to be any different. I'm going to watch it. It's going to go back up. Yes, it's going down a little bit, but it's going to come back, and I'm going to make money on it. Yeah? What's the problem? Now you have, you've got past experience, and you're applying this to a completely new situation. And this is where the next problem comes in. Your ego. Yes? If you've had some successful trades, all of a sudden you're saying, hey, I know what I'm doing. I know what I'm doing. I know this position is going to come back. I know I'm going to make money on it. Okay? If you don't leave your ego outside and you involve it into trading and you think that you know more than the market and that you can beat the market in that kind of way, that's when a lot of problems happen. That's why risk management is a very, very important factor. It is a boring subject. No one wants to talk about risk management. But when I speak to some of our biggest clients and some of the professional clients, the first thing that they think about is downside protection. What do I mean by that, downside protection? If you've got an account with $1,000, $10,000 in there, doesn't matter how much money is in there. Yeah? You have to think, how can I avoid losing a big chunk of what I have in my account? Yeah? Why is that so important? Everyone only thinks, oh, how can I double my account? How can I become rich? How can I have a second income? How can I retire from my job and just trade? Yeah? That's good. That's good motivation. But if you want to be a successful trader in the long run, what you have to do is think about how can I protect my account from blowing up? Because that's the worst thing that can happen. It happened to me. I had to learn this the hard way. When I started out 10 years ago, I blew 3-4 accounts just like anyone else that joins the trading community. Yeah? Why? Because I didn't put stop losses. Because I took positions that were way too big for my account. Because I got greedy. Because I was fearful. Because I overtraded. Overtrading is one of the subjects that we haven't touched yet. Overtrading, let's say you had a good run, 4 or 5 different trades, or let's take a different example. Let's say you had a bad run, yeah? Let's say you had an afternoon and you had 3-4 bad trades in a row, yeah? You've lost some money. Your account has gone from $1,000 to, let's say, $700, yeah? What's the mindset at that point? You see the market keeps moving, and let's say the market now actually moves in the way that you thought initially before the 3 trades went against you and starts going up in your favor. What happens? Most people don't have the strength to walk away and say, hey, I'm going to come back tomorrow and I'm going to have a new fresh mind and I'm going to start trading again. What happens after these 3 trades usually is that people sit on their chair, they look for a new opportunity, and they keep trading. And all of a sudden, a small-ish kind of loss, yeah, that your account could still carry, then becomes into, oh, I've finished the day, and I've placed 25 trades. I've started with 3 bad ones, and you could have just walked away, said, tomorrow I'm going to start again with a fresh mind. No, you continue trading, revenge trading, yes? You're mad about the markets, you're mad about the broker, you're mad about Bloomberg, you're mad about your friend that he told you something bad, and you lost money because of them. It's not your fault, it's someone else's fault. But you're going to make it right. You're going to now make that money back that you have just lost. Right? That's the mindset. I had that mindset. Yeah? No one is immune to that kind of mindset. I'm just trying to give you examples of what happens when you're trading the markets and the psyche that is affecting your decision making and how you can prevent from some of the, this has nothing to do with the markets. This has nothing to do whether you're a good trader or not. This is all psychology. This is all how do you behave in specific different situations. And if you have the strength to say, hey, in my trading system, yeah, if I've got 3 unsuccessful trades in a row, I'm going to walk away. It doesn't matter if I've lost some money on that day. The market is not going anywhere. Market's going to be here tomorrow. I can take some new positions tomorrow. Why do you need to keep trading in that specific time? There's no need. Yeah, you're not going to make that money back right there and then because you're already in the wrong kind of mindset. And that's something that's very, very important, that you come into trading with a clear mindset and you have planned your trades in advance. Yeah, I now give you a better kind of example of how you can organize your trading. Let's say we're on a weekend, the markets, the indice markets are closed. For crypto, this is not the case, but let's say the traditional markets are closed on the weekend, and you do your analysis on the weekend. And you go in and you say, hey, last week, let's take a different example. Let's take the gold markets. Last week, it was bad for the gold markets. Yeah? Gold markets fell from 1833 to 1750. Yeah? Now you've done your analysis and you've looked at some of the indicators that you use or the signal provider or however you make your entry and exit decisions. And you have decided now is actually a good time to buy gold again. Yeah, it was oversold, I'm buying. Okay? Monday morning the market's open and you say, okay, I've got 10 grand in the account and I'm willing to risk 1 grand on this position. Yeah, which is 10%. Way too much in my opinion, but a lot of people trade in that way. Let's say you're willing to risk 1K so you don't get stopped out in any kind of small move. And you say, look, I analyze the chart. I think it's going to go back to 1780. Yeah, 1780 is an important level. I'm going to put my profit target at 1780. And if it gets there, I would have made 3 grand. Okay? So that's a risk to reward ratio of 1 to 3. At that point, you're saying, okay, I'm going to open my position, put the stop loss as 1,000, and keep the profit target at $3,000 higher. Now, at that point, you can go to work, you can go spend time with your family, you can do whatever the hell you want. There's only two outcomes that can happen. Either that trade, you lose $1,000, or you make $3,000. All this in between of watching the markets, watching the phone, watching everything, only happens because either you have to watch the market because you didn't put a stop loss, or you have taken a position that is way too big for your account, and you have to watch it because there's so much on the line. In my example, it is just one more position that you're taking on your trade. And when I said earlier, you get attached to one trade, yeah, a lot of newbies get attached to one trade. You have to start thinking, let me look at this in a number of trades. I know that I want to trade, yeah? I know that I'm going to place hundreds of trades on my account. I'm going to look at positions, or I'm going to look at my account strategy in sets of 10, yeah? I'm going to place 10 trades. I've got, let's stick to gold. I only trade gold. I'm going to put 10 trades on, yeah? I'm going to put a stop loss every time of $1,000 and a profit target of $3,000, yeah? And let's say the first 5 trades go against me. I lost $5,000, yeah? But then 3 trades go in my favor. I make 3 times $3,000, $9,000. Net, I'm up $4,000. The problem that happens is that people don't think like that. They think that one single trade needs to make me the money. Yeah, and that's why they have bad decision making. That's why they interfere with these kind of trades. Yeah, I said now $1,000 and $3,000 profit target. Everyone needs to decide, you know, how much money they can put into a trading account and how much they're willing to risk. But the same thing applies if you have $1,000 in the account or $100,000 in the account. Look at trades as a series of trades that are happening in your account. Do your analysis before the trade happens. Don't do the analysis ad hoc whilst you're in the trade, because that's where the problem comes in. You hear some piece of news on Twitter, on whatever news site you're following, and you made an ad hoc decision. So you could have been up 1,000 on that trade. You say, oh, let me get out, because someone somewhere is saying, oh no, the market is going to go down. All of a sudden, you took a third of the profit that you promised yourself to take, much smaller than, and now a negative trade of 1,000 is just going to cancel these 2 trades out. Okay? These are some of the things that I keep seeing thousands of traders make the same kind of things, and I've experienced them myself. Just when you're new to trading and when you're starting out, these are things that no one tells you about. You have to either experience them the hard way, and there's no books that talk about this in particular. I'm getting a flash that my time is up. I'm more than happy to stop. I can go on for hours if you want me to about this subject, because I'm very passionate about it, because I've lived through these moments as well. So I'm more than happy to, anyone that wants to speak to me afterwards, take some time and speak to you. We've got a stand outside as well. Thank you very much for listening to me. I hope it was useful for you guys. Thank you.